Paul Lapis here with Remax Hallmark here in Toronto, and I'm back this week with the market numbers for January. They were just released, and what's making headlines is the increase in activity for sales, up 36% from last month and year over year. Really, the big takeaway here is that yes, everyone's talking about how activity has increased, but it was increasing from a historic low, like a low that we haven't seen since the 2009 financial crisis. So sales are up, but still down from our historic average by about 6%. So even though we're roaring back, it's actually more of a soft roar or a light jog into activity. We are seeing multiple offers kind of pick up here sporadically in different neighborhoods and for different inventory type. Seeing the sold over asking increase in some neighborhoods like Durham, up over 25 or a quarter percent of the property sold selling above asking, and as well the same metrics for the semi-detached in the city. Next, we're going to look at new listings. So new listings also dramatically increased from December. We saw a 113% increase in the amount of new listings, and that was from a lot of sellers who had taken their properties off the market in December for the holidays, and as a lot of sellers who were waiting to hold off for the new year. Now with signs and talks of decreased rates coming, there's a little bit more optimism for sellers, and so we're starting to see them come to the market with hopes of maybe achieving their price with the increased activity, especially after these numbers are being released by the headlines. The sold to list ratio we saw creep up this month as sales outpaced new listings in certain neighborhoods like semi-detached for Toronto and Durham region, hitting kind of almost seller's market territory at 60%. So that means 6 out of 10 listings are selling, and that's indicative of a hotter kind of seller's market. Most other neighborhoods and types are sitting still in the kind of 40 to 50% range. When it comes to inventory fell for the third month in a row, only about by 2%, but it's indicative of the increased sales offsetting the amount of listings coming to the market. So inventory is sitting around 10,000 properties on the market in the GTA, and that has pushed months of inventory down to 2.39 months of inventory, which is a level we haven't seen since last June, when the Bank of Canada did their consecutive rate hikes for June and July. Really, we were kind of experiencing the opposite in the market, in which buyers started pulling back from purchasing and sellers started pushing their listing out, causing months of inventory to peak in October, even for the condo market peaking in about 5 months. So since October, we've seen a steady decline in the amount of active inventory and the months of inventory, as sellers have either pulled their listings off the market or buyers have steadily purchased what's been available. As we head into looking at the average price sits at around $1,026,000. This is slightly below last year, about 1.2% below last year, and a 5% decrease from last month. So we did see decrease in the average price. So all this activity, all these buyers coming out, isn't necessarily translating into higher prices for sellers, or like I said, the market conditions are tightening. We are seeing more buyers going into competition, but it's not generating a significant bump in the price, or actually holding prices steady. A lot of this, I think, has to go back to that we're still dealing with an affordability issue even though interest rates have come down for the 5-year fixed rate sitting at 5.25, 5, maybe 5.5. It's not enough to have buyers throw everything at a property, everything in the kitchen sink to get it. So offers are still somewhat tempered, even though we're experiencing more properties getting double digits, let's say, offers. I've also seen a handful of properties on the ground that have had failed bids, prices not meeting sellers' expectations, sellers coming back to the market with repriced properties, or dropping the whole offer night strategy altogether and just repricing the property. On a segment by segment, when we look in the 905 region, we saw most of the uptake actually happened in the suburbs. So we saw, after I think it's been 6-7 months of sluggish activity, we saw about a 40% year-over-year increase in the number of homes sold in the 905 region. But again, this did not translate into higher prices, as prices actually are down 2% year-over-year. On a historical average context, so sales in the suburb are still down about 6-7%, but that's not bad because all of 2023 we were down by 30 to 40% from our average number of sales. So things are picking up. In the city, sales slightly decreased from last month, but December was an unusually busy month for inner city activity. But we're still down on a year, and average prices are sitting about 1% above where they were last year. So again, prices are holding in the city and fell slightly in the suburbs. The condo market again also saw a big uptick. It was basically on life support for the last few months, but with the drop in inventory, we actually saw sales pick up by about 46% year over year, and that translates into about 37% month over month. So big jump in the amount of condo activity that we saw out there, but prices stayed flat both year over year and month over month. We're sitting about 709,000 as the average price, and that hasn't moved in a month, and that hasn't moved since last year. So although we're experiencing an increase in buyers coming back to the market to purchase condos, a lot of them end users, it hasn't necessarily translated into higher prices yet. Inventory also upticked slightly, about 6%, as new listings kind of jumped month over month. We had almost no new listings last month for condos, and they jumped 130% in January. If you have any other questions about the market or about what's happening, feel free to leave a comment below or DM me or reach out directly. I'm always happy to talk real estate.